Junu, welcome.
Hi, Jeff. Thanks for having me on.
My pleasure. How has your week been so far?
It's been pretty good.
Hmm.
It's a busy week,
Hmm.
as always, in the world of the economy and
I
financial
know.
markets.
It's crazy what's happening now in terms of world affairs, the economy. Is there something sort of stuck in your mind that you're thinking about when it comes to world affairs or the economy? Or
Well, I think the main theme that's the world is facing is inflation.
hmm.
Uh, and we've seen signs of that globally last year with COVID, uh, with opening up from COVID, but still facing these supply constraints around the world to try and meet up with this surge in demand. And those constraints, in a way, have persisted. There's a new COVID outbreak in China, and
Wow.
that puts at risk, further supply constraints on the world, and the war in Ukraine as well, and that impact on energy markets, because
Hmm.
Russia is a big exporter of oil and gas, and now it's quite restricted now, and so that's been a reason why oil prices have gone up a lot.
Hmm.
And with higher inflation means higher interest rates, and there's a prospect that we will see interest rates higher than what we've seen for a really, really long time. And it'd be interesting to see how the world adjusts to that.
I'm curious about China, Junu. I understand a lot of exports come from the ports in Shanghai and Ningbo, I believe. And is that correct? Or
Yeah. Shanghai's port is like the largest in the world.
hmm.
So the reports are that the port is running as per usual.
Mhm.
So it's not in the lockdown, but you still have to bring the goods or whatever to the port and onto the ships, and there is likely to be some difficulties with that. Potentially workers might be locked down. And, it's there is those risks that you'll still see some difficulties in that supply chain.
Is it a simple case of letting these things iron out, Janu, or is it something the government can do to somehow expedite the shipment of goods? Because I never really understood how it sort of works. I read somewhere where maybe it's as simple as stacking the crates higher up so you can store it. But
Yeah,
if you don't have enough labor, nothing's going to move. Is that right?
but
Or
but if their priority is to lock down and bring COVID cases down, then I don't know what they can really do. I mean, they have, as I said, kept the ports open, and maybe they can, and which also means they allow workers to into that whole system of bringing
mm,
things in and out, uh, but at the same time, like we'll have to wait and see. There have been reports that it's been difficult with the trucking part, so getting people onto trucks and shipping and driving stuff
is
in
that
and out. And
because
that's where one of the bottlenecks are.
you mean trucks in terms of people aren't driving them because they've got COVID, or there's not
Well,
enough
because
trucks?
no, well, it's not that they've got COVID; they're locked down. I mean, a lot of people in Shanghai were literally could not leave their houses. And it's eased up a little bit now that people can get out, but it's still facing some pretty tight restrictions. And if they want to and as far as the key messaging has been, that they want to pursue and maintain this zero COVID policy, then to bring down cases to, that to zero, it's going to take quite a while.
Mm.
I mean, they've come down a little bit, and they peaked, I think, somewhere about 30,000 last week, and come down a little bit this week.
So maybe the world needs to stop buying things. Would that solve it? Because to me, you're telling me that if we have truckers, so to speak, who are stuck at home and can't drive it to the port, maybe I'm
talking about the bottleneck in China.
Yeah.
Where there are issues in, there's also the production side as well. So with the lockdown, there's perhaps more difficulty in getting production. So factories did close for a period. They have reopened again in Shanghai, but there are a number which closed for a period and they're trying to operate in some COVID bubble arrangement. But still, it's that uncertainty. There's some other lockdown in the future, particularly because they want to
stick to that zero COVID policy.
Exactly. So there'll be the risk of another lockdown later on, even if when cases come down, saying Shanghai. And it's not just Shanghai, like there's a whole lot of cities and areas in China which are under some form of restriction. So the odds are you'll get some form of restriction having some impact on global production, affecting something somewhere.
Mm. So naturally it's going to build up, because if the world keeps demanding goods, these ports in Shanghai are never going to have a rest period, and it's just going to keep barrel rolling it and just get blocked up. Is there really a solution?
Well, there's the price adjustment, right? Like, so that's why prices go up, and that's why we have inflation.
Mm.
And it's that price impact which means that people won't buy as much.
Hence the rise in interest rates to increase the cost of borrowing.
Hence higher inflation.
Interesting.
Yeah. Bit of economics.
So if that's the case, Janu, could you sort of, is this sort of transitory in a way then? Because I know the whole conversation in the media about, whether inflation is transitory versus permanent. From what you've been sharing with me, it seems that if this bottleneck does get rectified in terms of 6 months, 1 year out, and we have the rise in interest rates to dampen demand, inflation therefore is transitory?
Yes, and there's been a strong case of that, but we've seen these constraints occur for over almost a year now. So the question is, how transitory is transitory when it's a little bit more persistent? And that's something that policymakers need to grapple with when they're setting interest rate policy. But on top of that, say you didn't have these constraints happening at all. Okay. You have economic conditions which don't justify interest rates at near zero, which is where a lot of them still are now. And in Australia, the RBA hasn't lifted interest rates. And the US Fed has only just started raising interest rates. But the economic conditions which are that there's a strong economy, economic growth is pretty strong. Unemployment rate extremely low.
People are buying our commodities.
Yeah, commodity prices are high, and
$80 is quite strong, I believe, or because of the purchase of commodities.
Relatively strong.
Yep.
Yeah. So that all suggests that we shouldn't be having interest rates at zero or near zero. And
so why have we like, I'm very curious, Junu, because your background, you're an economist.
Yes.
You know it very well. You've been in the industry quite some time now. Correct if I'm wrong, interest rates were brought down so low because of COVID, obviously. Is that correct? And if
yes,
things go back to normal, what's holding back the RBA and the Fed from doing it sooner rather than later? I always get confused about that.
I think there's a recognition now, particularly in the US. In the US, there's definitely been that recognition that, okay, we need to bring up interest rates a bit more quickly now. And so you'll see some more aggressive monetary tightening or as you said, like interest rate hikes. So say, for example, in the next couple of meetings, you could see 50 basis point hikes instead of the usual 25, which is what we're used to seeing. In Australia, the RBA has not been as aggressive in that tone, but they're slowly getting to that point where, okay, look, interest rates need to rise a little bit sooner than what we thought, and so the odds are that will raise interest rates pretty soon, if not at least within the next couple of months.
Is it because the whole inflation target band, like you notice it better than anyone else, right? Like I keep reading that Philip Lowe wants to see sustained inflation within 2 to 3. Now,
yes,
exactly. What does sustain mean? Does it mean 3 months, 6 months, right? So what I don't understand is, why is he holding back?
I think that comes down to what you just said before, that isn't inflation transitory?
Interesting.
And that's why he's used that word sustainably, having inflation sustainably within 2 to 3%.
But if employment is at its all-time lows, economic growth is going very strong, isn't he worried that there could be overheating? And isn't he concerned that if we have rates so low, there is no other alternative? And like, people aren't going to put their money into a term deposit. So therefore, people need to go up the risk curve. And if people go up the risk curve, I read this morning in AFR, in the lunchtime, AFR is back to its all-time highs. But that's probably because of the fact that the ASX 200 is consisted of the banks and the big commodity guys. I'm fascinated by how it works in terms of the interplay between world affairs, the economy, micro factors. So
if you think back to before COVID, we didn't have inflation for such a long time. Like, inflation as a problem was not even on the radar, and like for decades, really. And I think sometime after the pandemic hit, there was this rethink among central bankers, I think, that, well, we've had such low inflation for so long, what's the harm in having a little bit of inflation? And I think that has contributed to why the Fed itself and the RBA as well in being a little late in withdrawing stimulus and bringing up interest rates.
As in a way of saying, as a reset, maybe?
Well, it's because that, okay, well, we've had this long period of virtually no inflation that we can afford to have a little bit of inflation, and we'll tolerate inflation being higher than what we normally would. And I think that's put them now in a difficult spot because it just now seems that they're behind the curve.
Hence, there's a lot of criticism about how they're approaching it.
Yeah.
Tough job.
Yeah, I mean, in a way, it's, I mean, from the whole time I've been studying economics and watching what central banks are doing, they've always needed to be a bit preemptive because what they do now affects what happens, down the track. It's not an instantaneous impact completely. So central banks have needed to be a bit more forward-looking in how they set policy. Okay, well, we think the risks to inflation have increased, and then we'll start increasing interest rates and that sort of thing. And so I think in this case, in the last, say last year or even the year before, I think it looked like central banks were just thinking, okay, well, we'd want to see some more evidence of these inflationary pressures being persistent. And so now we're here.
Is that because, so instead of central banks being preemptive, they're being more reactive now? And therefore you're saying that they're happy to let it run hot a bit?
I think that's why they've been a little late in raising interest rates now, because they've let inflation stay high for
too long.
I mean, I'm not sure we can say it's too long. I think in different circumstances, maybe in a different period, it would seem a little bizarre that there would be persistent inflation above target, plus plus all these other conditions I spoke to you about, like strong economy, low unemployment rate, etc.
And I'm curious to know about globalization and the mobility of workers. Have those two things helped to stem inflation?
Well, I don't know if we can say that inflation's very stemmed. It is lower in Australia than, say, in other countries around the world. So, and I think that maybe we had a lower starting point in terms of where wage growth was to begin with.
Because wage growth in Australia, that's still quite moderate.
Yes, exactly. And arguably you could say that has given the RBA a bit more time as well. That they haven't had to be so I guess so for coming in.